Hi, Amber here from List Social Real Estate. Hope you're all well and staying warm on this chilly Friday. Just wanted to come to you and share some information about some discussions that took place in the office today about what's going on in the property market. As you're all aware, there are issues going on, especially for people who are in the boat of building new houses. There has been the issues of the big building companies that are folding or in the process of folding. And as a result of that, there's many of you that are building that have become stagnant in the progress of that build, which is really unfortunate. We are starting to see that there are a number of half-finished builds entering the property market for sale, which is very sad to see. And this has obviously come about from building companies coming back and expecting their clients to pay more to be able to get the build finished, or they've just simply not been able to afford to do so, so they've put that build on the market. This is a problem that we're going to start seeing more of. This is going to be a problem for people who've bought land or a property where they've planned to knock down and rebuild, where they're maybe starting to second guess whether or not it's a good idea to go ahead and build a new home, just considering the delays that lay ahead in front of them. So what we expect to see is that even though increased interest rates are on the horizon for the remainder of this year and early next year, we were thinking that yes, property prices are going to go down because people's borrowing capacity won't be the same as what it is now compared to into, say, 4 to 6 months' time. We expect banks are going to be a bit tighter in how much they're going to be lending and that criteria as well. But what we do see, and after discussions today, is that we have two markets. We've got markets with people who are looking at building a new house, but are now starting to rethink that. Well, what does that mean for them? If they're not going to rebuild because of the instability and the uncertainty in that building market, they're going to be now looking to buy already established. So what that means is, even though we've got interest rates predicted to go up, or scheduled, I should say, to go up for the remainder of this year, even if they do get to, say, 2.5%, 3%, they are still considered historically low interest rates. Now, who are going to feel these interest rates are people who have started buying property within the last 11 years or so that have never experienced an increase in interest rates. And unfortunately, there are a lot of those buyers who have been borrowed up to here. So, if there is an interest rate rise of 0.5%, 1%, 1.5%, a lot of them are going to be financially feeling that pinch. So yes, we are expecting more of those properties to come up on the market. However, getting back to what I was saying about the building, if people aren't going to go build those new houses, they are going to be looking and needing to buy something already established. So depending on what area you live in and the general supply and demand of that area, if there is lower stock available compared to the demand, it is going to at least stabilise your property price instead of going down as expected, or in actual fact, it will put it up. So it does depend on the area that you're living in with the supply and demand. But as a general rule, we're finding that even though these interest rates are going up, we seem to now start having confidence in the property prices that they're going to be more stable than what we actually thought they were going to be for the remainder of the year. But as always, it is a game of wait and see. The economists back at the start of COVID were all doom and gloom, saying property prices were going to drop by 30%. And we can see that that certainly wasn't the case. In a lot of cases, it went up 30% over that COVID period. We are experiencing a market that is cooling off, and it is cooling off quite quickly lately. But again, once, now that the election's over, that was one thing people were hanging out for, to see what was going on. But also too, once the next interest rate rise occurs and things have stabled out a bit, we're expecting the market to then start slowly gaining more confidence, and people will start buying again. So for those of you who are worried about what is going to happen to their property prices later in the year, that's fine. And look, we believe that if you are looking at selling, whether it be sooner or rather than later, we do recommend that you sell sooner, just because we don't really know exactly what's going to be happening later on in the year. These are our thoughts, these are our predictions, but again, it is a wait and see game, and we'd love to know what you think about it as well. What do you think is going to be happening towards the end of the year? Put your comments below. We'd love to hear your opinion. Thanks.